What is going on, traders? Hope everyone enjoyed their weekend. I most certainly did, but it is time to get back to the money. It is time to talk about this next upcoming trading week. What should we do? What should we be looking at? All that fun stuff. So before we start, like, subscribe, comment your thoughts below. Let's get into the video. So right now we're looking at the SPY weekly time frame, and something we've been talking about for quite some time is this trend line. You don't have to believe in trend lines. If you don't, I don't know why you're on this channel, but if you are a believer in trend lines, I highly suggest you mark this on your charts, right? It doesn't have to be perfect. You just have to have an idea on where the SPY can potentially go from here and where we could potentially see a rejection from here. Now, why do I say that? Well, again, this is the weekly time frame. Every time we've hit this trend line or even gotten slightly above it, we saw some type of rejection back towards the downside, right? You rejected here, you broke above, you played your little games here, and keep in mind, once again, weekly time frame. So this played out for about a good month or two before we actually saw a drop towards the downside, or a legitimate drop towards the downside. But for a few 1 or 2 months, we saw that we were pretty much consolidating within this range, right? And then eventually we ended up breaking down, right? And then we made new lows, and we continued to make new lows, so on and so forth. And so we fast forward, right? Before we got the tariff news, we saw once again that we hit this trend line. We played games here for about good 2-3 months, and then ultimately we broke towards the downside. We even had a double top here. So you had a top here, you had a top here, and then you had your neckline at 575, and then that's when we officially got the tariff news. And then you see what happens here, right? We made new lows, we broke down, we broke the 200 in May, we had our death cross that we talked about, all that fun stuff, and now we have our V-shaped recovery back towards the upside, and we're getting close to this trend line once again. Now, to make it clear, I'm not necessarily saying that we have to reject from here right away, right? We can play games here for, just like we saw in the past, where we can, maybe break above it, consolidate above it for quite some time, right? We do one of these moves, break above it, do something like this for however long, maybe August, September. September is notoriously a bearish month, and then we break down from here. So why am I saying this, right? What am I saying? Okay. I'm simply saying be careful, right? Be careful, take profit when you can. You see green, you take green, all right? I usually look for about 20 to 40% on my trades, and then I trim contracts. If you believe a stock is going to go higher or lower based on whatever direction you're trying to trade, then I suggest that you trim some contracts once you start seeing some decent amount of green, 20%, 40%, whatever rule you have, right? Trim some contracts, pay yourself, and then leave whatever runners you need to leave, and then maybe leave them for a break even price. So when they go back to zero or worth zero, you close them out. That way you don't lose out on any profit, or you collect profit further on if they continue in that direction towards your bias, right? That's my game plan. Okay, that's been my game plan for about a good month or two, simply because of just how volatile this market is, or I wouldn't say volatile, but how sensitive this market is towards news, especially when you're talking about Trump. And so again, right, I want us to be cautious here and just more so take a profit as long as we're within this range here, right? If we could take profit here, then I think we're good. Okay, so that's just me. Do what you want, but that's just my idea on how to trade this market within the next few weeks or so, month or so, whatever the case may be. Simply because we're getting close to this range, right? We're very close. Okay, we're very close to this trend line, and anything can happen, right? Maybe we melt up. I don't know, but I'm gonna be careful here. If we get here, right? If we get here, I'm going to be careful. I'm going to obviously expect some type of consolidation within this range, nothing too crazy, right? But I'm not going to have my hopes up on the SPY hitting 650 or something like that. I think 630, 635 is a reasonable place to be cautious at and look to take profit at. Now, let's say we don't hit that target, right? Let's say we don't hit this trend line at all. Okay, maybe it doesn't happen until later on in the year, right? Well, what I'm looking at is 620. Okay, maybe we gap down tomorrow. I don't know. We're getting a lot of tariff news. I believe we got tariff news yesterday and more tariff news Friday, but maybe we gap down, whatever the case may be. But my key level here that I'm looking at is 620. I encourage you, right? Again, if you trade off trend lines, if you trade off support and resistance, supply and demand zones, whatever the case may be, I encourage you to mark this trend on your charts, because if we break below this, if we go to the 4-hour time frame, we've been holding this trend for quite some time, right? So this was a very serious level, and once we broke above it, we consolidated a little bit, but ultimately we climbed higher. So if we break back below this trend and 620 simultaneously, then I do believe the gates are open towards 613. Okay, now we talked about 613 before, right? I didn't want to keep regurgitating the same thing over and over when it comes to levels, so I gave you guys the most important level of all levels. 613 is your key level. I did this earlier. 613 is your key level here. You break below 613, the doors are open to 600. Okay, want to make that clear. So 605, 600, so on and so forth. So if you look at the weekly time frame, right, you see how important 613 is. Okay, right here. Okay, right about here, somewhere around this range is what you're looking at. Okay, you can even turn this into a zone, right? You can turn this into a supply and demand zone and say, okay, maybe 613 isn't an exact level, but you could say, okay, 609, 608, somewhere around that range is where this zone is breaking below or officially broken below, and then we can see it move towards that 600 target. So that is the level that you're going to be looking at. 613, if you want to turn it into a zone, you can say between 613 and 608, we break below that zone, then chances are we're going to head much lower. So that's how I'm pretty much approaching the market when it comes to downside. I'm not yet convinced until we at least break below this trend at 620. We've seen the SPY defend 620, 619 more or less consistently. After that, you're in a tight range about 620, 618. So SPY could play games around 618 as well. But ultimately, your level of all levels here is 613, guys. Okay, that's the main level you should care about at this point. Once you get below 613, you break below 613, it gets pretty illiquid towards the downside, and you open up the floodgates back towards the 600s right here where these guys are. And I do think bulls are going to defend that 600 level if and only if we head there. Okay, so I wouldn't be surprised if bulls start getting defensive here. I don't imagine we're going to just straight give this up and just, you know, head straight down or whatever. I do think we're probably going to see a bounce from there if we head there. Okay, this is just a bear scenario that I'm talking about. I'm not guaranteeing this is going to happen. All right, so plain and simple, guys. If we get closer to this trend line, right, 630, 635, be cautious, look to take profit. Even now, look to take profit when you can, you know, trim some contracts, leave some runners, so on and so forth. And yeah, just be careful as if we continue to climb towards the upside or consolidate towards the upside, just continue to be cautious, be careful. If we're looking to break towards the upside, I will look at that 620 level, 618, and your level of all levels, the final boss, 613. Okay, you break below 613, the gates are open to the low 600s. We look at the triple Qs. Triple Qs, you're looking at the same exact scenario, right? You're on the daily time frame. Sorry about that. You're on a daily time frame, and right now you broke below this trend line, as you guys can see right here. Now the difference is that you are holding another key. Well, I wouldn't say it's a difference. It's pretty much the same thing as the SPY, right? Not to confuse that, I'm not saying triple Qs and SPY are the same thing. I know some of you are special with comprehending things, but what I'm saying is that you are next to another key level here on the triple Qs, just like on the SPY. 620 for the SPY, right, and 550 on the triple Qs. If the triple Qs manages to give up 550, you open up the floodgates towards the low 540. Surprise, surprise. But ultimately, what I would say is that I don't think we're going to head straight to the 540s. I think it's going to be very tough to get there, right? I do. We'll need some really bad news. Right here, this is annoying, right? This is annoying. So this is why I'm pretty much saying, like, no level really matters until you break below 630 on the SPY, 613, I'm sorry, 613 on the SPY, and for the Qs, 540. But as long as you're within this range, when it comes to the triple Qs and even the SPY, you can just continue to see dip buying, right? And it's going to be annoying if you're looking to be bearish, right? Because right here, annoying. This is the daily time frame. These guys are going to defend, right? They're not going to give this up easily, okay? Unless we get news from the straight abyss. I don't know, but this is what I'm looking at, right? We break down, boom. We play games here probably, and then maybe break down further, or we break back up. I don't know, but ultimately, if we get within the 545 range on the triple Qs, be careful. It could be a dip buying opportunity. All right. Maybe you like that. I don't know. But I don't know why I'm saying be careful. But maybe you would like that. But ultimately, 540 on the triple Qs, 513 on the spot. Now, if we are looking to go higher on the triple Qs, I would say that we can head as high as the 560. I think 560 is reasonable, right? I think that's a reasonable target to see. All right, if we're talking about bouncing back towards the upside, 560, 560, 565, somewhere around that range. And then again, I would urge you to be cautious. Okay, just like I said on the SPY, same thing for the triple Qs. Be cautious. Okay, so that's what I'm looking at for the triple Qs. Hopefully that made sense. So let's look at some stocks real quick. So I want to look at Tesla. Right, Tesla is breaking out of this channel right here. This isn't necessarily a falling wedge or anything. This is more so a falling channel, but I wouldn't blame you if you said falling wedges. I guess it's not a big difference. Okay, but regardless, when you're looking at Tesla, it looks good, right? It looks like you could see more upside here, right? My only concern here is that you are right. You're pretty much almost touching the 200 MA, right? So no pattern necessarily matters if the 200 MA is in the way, right? And I would say the projected move for this is about 350, 360, right? But as long as the 200 MA is in the way, it's kind of hard, it's really hard to want to trade this, right? Because I was really thinking about trading this on Friday, but I don't. It's hard to trade against the 200 MA. It's just you can't do that. Okay, you take so much of a risk doing that, especially over a weekend. So I want to wait until see how Monday opens up. I imagine these guys here, they're going to defend as well. So even if you get above the 200 MA, it could easily turn into a bull trap, right? But on the bright side, I mean, I guess if I want to give you some type of hope, I will say that this pattern does have a projected move to 350. Tesla's above 300. You've continued to make higher lows here. So low here, higher low here, another higher low here, right? So bulls are trying to push Tesla higher. It's just that 200 MA you got to get past, guys. Okay, you got to get past that for me to be, for you, even you to be somewhat really bullish on Tesla. But for now, this can easily turn into a bull trap. So I would be careful. All right. I would very much be careful. 200 MA is at around 315, 316. Get an idea of it. But if you can get above that, I mean, look where you are if you get above that, right? These guys right here. These guys right here, I tell you guys all the time, candles tell you everything you need to know. Where the bulls are, where the bears are, all right? These guys right here, these guys right here. You get within the range of these guys, there's potential. Okay, Tesla can definitely head towards at least at a minimum 327. So we'll see. All right. Another stock I want to talk about is Boeing. Okay. I know Boeing isn't like a common stock to trade, but this thing has been on a rampage lately, and I talked about it in other videos when it was like at the low 200. I told you guys this thing was going to take off, right? And Boeing looks good. You're breaking out of this bull flag, right? So bull flag, you got your lower highs, lower lows, and then eventually you break out. Boeing looks really, really good. I definitely see a world where this thing can head to 250. Okay, 250 is what I'm looking at. I don't have a reason to be bearish on Boeing, really. I mean, you have this gap fill here at 234, between 234 and 243. That's something else you want to look out for in the daily time frame. But ultimately, I think Boeing is going to take off, assuming that the market is bullish, or assuming that the Boeing even decides to follow the market, because it's kind of been doing its own thing lately. We'll see. But really, really like Boeing. Now, like I said before, you want to be careful. We're on a weekly time frame. You want to be careful. We broke above this trend line, sure, right? But every time we broke above this trend line, it turned into some type of bull trap. Now, this is the weekly time frame, so keep that in mind. It could take a while, but every time we broke above this, it turned into a bull trap. So you want to be careful here, okay? You want to be careful, but I do think at minimum, Boeing is going to at least fill the gap at around the 240s, high 240s, before potentially, if this happens, we end up getting bull trapped, or Boeing bull traps, right? And does this all over again. It's very much possible. Okay. So that's what I'm looking at. All right. That's what I'm looking at. Tesla, Boeing, Apple. Apple looks okay, right? It's just still below the 200 MA. That's something you want to look out for. So, probably fill this gap at 223. And then after that, really tough to say if Apple's going to continue to remain bullish. Okay. Probably touch the 200 MA, and then that's pretty much it. Okay, we'll see. All right, so just be careful with Apple. Just pay attention to a lot of these names. Semiconductors, again, it's going to be very hard for me. It should be hard to just flip bearish at all until you see semiconductors give up key levels. And right now, it just doesn't seem like that's going to happen anytime soon. I don't know. I could be wrong. Right? Earnings season is coming up, guys. So just be careful. Trying to over trade the upside here, because I imagine a lot of these big names have priced in a lot of upside already, or a lot of good news when it comes to earnings. So I don't see a world where they just continue to price in more good news once they report earnings. We'll see. But 170 is a target I'm still looking at for Nvidia. I just have no reason to change my mind here. People are asking, should they trade it? I don't. The space seems so limited, and it seems like it's playing a lot of games just to get there. So I wouldn't say it's worth it, but it's up to you. You also have this pattern here, this reversal pattern here as well. This showed up, I believe this showed up on another name, maybe SMH. I could be wrong here. I clicked the wrong SMH. But that is a reversal pattern that we've seen before. I just can't remember where. I showed you guys it on another video, but I can't remember where. But regardless, Nvidia might see some downside. But I mean, as long as Nvidia holds 158, I think it's fine. 158, 159, I think it's fine. So I think it still can see a move to 170, maybe even higher, maybe a little bit higher. We'll see. But yeah, that's what I'm looking at for Nvidia, guys. That's all I have for this video, guys. I didn't want to jump the gun. I didn't want to overthink heading into futures market open. We'll just see how it opens. If it gaps down, then, pay attention to the key levels we talked about, pay attention to the trend lines we talked about, pay attention to the support zones, whatever, right? Pay attention to 200-day MA if you're trading upside, all that fun stuff. Just pay attention, be cautious, wait 30 minutes until open. Like, that's what I do. You do what you want, but wait 30 minutes until open, see how the market digests the news that we got over the weekend. Bitcoin is a good leading indicator right now. Me personally, I think Bitcoin is just catching up. I could be wrong, but Bitcoin is looking good. We talked about this, broke out the bull flag. Right now, price discovery mode. 120 is your next major psych level. We'll see. Until the next video, traders, have a good one.